Well, lean hogs have made some impressive gains in the last week. Clinton talks with John Payne about what's driving the market right now.
John Payne, the author of Swine Times, our guest today. John, as we look at the lean hog market, we've been seeing a little bit of movement here in cash trades.
Yeah, specifically the April futures. So, folks trade spreads or they trade hogs. The markets have been kind of incredibly slow to the standpoint of range. We haven't seen much of the range, differentials like we've seen in, say, for example, wheat. Whereas in beans or in hogs front month specifically, we've been really between mid 70s and mid 80s. And today we broke above 92 in the April. So that puts a pretty significant amount of premium in that hog contract. And I think, given the last few weeks, we've seen slow slaughter numbers because of COVID. Staffing issues, trucking issues have limited slaughter both in the beef side and the pork side. And I think you're kind of wrapping that up now. I think the cases are beginning to fall, and I think there could be a rush of demand in the short run just to slaughter, because if you look at the cutouts on both sides, they're screaming. Bellies are up again today, and I imagine as we go forward here, if you take the president for his word yesterday, specifically pointed out the big four producers here. What does he do to unlock some profits for other parts of the industry? And I think that's really where folks in the feeder side and in the the livestock space, really on the production side, are kind of interested to see. I know I am.
John, as you look out into 2022, are you optimistic about this lean hog market going forward?
Yeah, I am. I'm pretty optimistic by nature, so I want to take that with a grain of salt. But I do look at where we are relative to a year ago, and we're well below prices that I think we could potentially see given the cutout prices. And these are all personal. My own eyes going into grocery stores. When you just see the shelves are a little less empty and prices a little higher, and you kind of wonder, okay, well, we should see more on the shelves if they're moving at these prices. And if this is true supply chain, then that'll catch up. So I kind of get myself into a mode here in Q1 and early Q2 where you want to be bullish, especially the summer hogs. Don't want to get yourself too over your skis on a short position. But China growing at 4% year over year is a problem. And if China's herd is large, and we've heard that it's actually growing back to where it was pre-pandemic and really the original pandemic, which is the swine flu, do they need pork exports? And I think you could ration there. But I think in the near term, we should see some pretty good action given the product markets.
All right, John, appreciate the insight. As always, thank you so much for being here. Back with more coming up in just a minute.
To find John's newsletter, This Week in Grain and Oilseeds, head over to www.thisweekingrain.com.